Bear markets and recessions are scary. They don't feel good. You come in every day, unless you're short. And I used to always trade these from the short side, so I loved these. But now I'm kind of looking at it from the other way around, and they don't feel as good. And I prefer the bull market. But this is how the world always plays out. Is there a structural change in the economy that means things don't recover? There is a non-zero, it is not a non-zero chance, i.e. there's a decent probability that we could structurally change how markets and the economy works. So that would be more scary, because then you don't get to get your money back.
Raoul Pal, in a recent interview, talks about the current bear market, and he says markets and recessions are always scary. He says there's a decent chance in the economy's current market condition to structurally change, which might lead to a permanent change in the market conditions and behavior. He also instills hope in his speech that central banks might use its magical tool, which is the interest rate, to adjust the supply of money to keep the economy humming. So I believe the best thing to do in a bear market or recession is to save money as much as possible, and also use some money in buying assets such as real estate and stocks, whose values would be at all-time lows due to the already weakened economy. So when the economy recovers, we would have a better chance to multiply our wealth. I remember, in the fall of 2008, when the global markets were falling, Lehman Brothers, an investment bank with $600 billion in assets, filed for bankruptcy. On September 15 of that year, an inflection point in the economic slowdown brought unemployment rates as high as 10%. 2 weeks later, on September 29, 2008, after Congress failed to pass a $700 billion bank bailout plan, the Dow Jones Industrial Average fell 777.68 points, at the time the largest single-day point loss in its history. Ryan Larson, a senior equity trader, told the New York Times, "You just felt like the world was unraveling. People started to sell, and they sold hard. It didn't matter what you had, you sold." But there was one big investor who had a different outlook. Can you guess who? It was none other than Berkshire Hathaway CEO Warren Buffett. In fact, Buffett was buying in large quantities. "I've been buying American stocks," Buffett wrote in an opinion piece for the New York Times on October 16, 2008. Berkshire Hathaway has made big investments during the crisis, backing General Electric and Goldman Sachs. Buffett understood the severity of the crisis. So why was he buying stocks that were rapidly falling in price when everyone else was keeping cash under their pillow? "A simple rule dictates my buying," he said. "Be fearful when others are greedy, and be greedy when others are fearful." It's so true, isn't it? In a recession, cash is always king, because it allows you to get these high-value stocks and properties at its all-time lows or at big discounted prices.
Is there a structural change in the economy that means things don't recover? There is a non-zero, it is not a non-zero chance, i.e. there's a decent probability that we could structurally change how markets and the economy works. So that would be more scary, because then you don't get to get your money back. It just kind of dwindles on the vine. But generally speaking, I think that central banks and their magic bullet drives up asset prices over time. So if you remember that, just make sure you own some of those magic bullets when they come, and that is owning some of these assets. So it shouldn't be scary. If you've got any cash, then you can buy more at great prices. If you haven't, then you need to make a decision: is how secure is your income? That's the key to everything. Income is everything. Assets are nothing. Is your income secure? If your income's secure, you just ride it out. If your income's not secure, then liquidate your assets and give yourself some cash. And in that situation, a friend of mine early on in my career gave me the great piece of advice, which was, he who has cash in a recession is king, because that's when you can buy everything on discount. That's when you can book any restaurant you want. You can buy anything you want. So that's the key. So just, if you can keep that in the back of your mind, yes, it feels scary, but maybe you can take advantage of it.
When asked about if cryptocurrency would be a hedge against inflation in any way, Raoul says that everyone has a wrong perspective when it comes to inflation. Crypto acts as a debasement to the fiat currency in its core functionality. I think he may be right. An old proverb goes like this: inflation is too many dollars chasing too few goods. Because inflation is a rise in the general level of prices, it's intrinsically linked to money. To understand how inflation works, imagine a world that only has two commodities: apples picked from apple trees and paper money printed by the government. In a year which has no rain, apples are scarce. One would expect to see the price of apples rise, because quite a few dollars would be chasing very few apples. Conversely, if there was a record apple yield, one would expect to see the prices of apples fall because apple sellers would need to reduce their prices in order to clear their inventory. Same analogy can be applied to inflation. If the government decides to print a lot of money, then dollars will become plentiful relative to apples, as in the earlier no-rain year example. Thus, inflation is caused by the number of dollars rising relative to the number of apples, which is the goods and services. Therefore, inflation is caused by a combination of 4 factors. The supply of money goes up, the supply of other goods goes down, demand for money goes down, and demand for other goods goes up. These 4 factors are thus linked to the basics of supply and demand. Since Bitcoin and gold have limited supply, they actually protect against the debasement of currency.
Everybody is completely confused between what inflation is. The thing that crypto is all about is the debasement of fiat currency. That is the printing of money. The printing of money has proven not to be inflationary in Japan and Europe and the US. There's no correlation. Inflation is a different thing driven by the supply and demand of goods. It is not everywhere and everything a monetary phenomena that was taught to the monetarists back in the 1970s coming out of the Chicago School. It doesn't work because velocity of money doesn't pick up. So people have been the gold crowd, the same. It's like the inflation. Well, what did gold do? It didn't protect against that because gold actually protects against debasement of currency and not the inflation. Inflation, nothing protects you. Correct. It's a long duration asset. Long duration assets get discounted by the rate of inflation. So it gets killed. So no, it can't be. It's debasement. So it's the value, the purchasing power of currency. That's the thing. And people confuse the two because they assume that printing of money causes CPI to rise, which it does not. It causes the denominator to fall, which causes asset prices to optically look like they've gone up in price. They haven't, they've maintained. So if you look at, over these periods, if you look at the relationship between gold and real estate and equities, they've all remained roughly consistent. And it's the actual factor was the Fed and the other central banks printing money, lowering the value of the currency, purchasing power terms, against scarce supply assets. So something that there is more of goes down in value versus things that are scarce, which is the whole crypto industry is built on this one premise as well. And that is right.
From Raoul's view, it's clear that crypto indeed acts as a protection against the debasement of the currency and not the actual inflation. Historically, the 3 main asset classes have been equities, stocks, fixed income, which is bonds, and cash equivalent or money market instruments such as real estate, commodities, or other financial derivatives. From Raoul's thoughts, it's evident that Bitcoin and the cryptocurrency industry as a whole will have its place in the stable asset class list, much revered by the institutions and retailers. What do you think about Raoul's view about crypto acting as a debasement of the currency and not as an inflation hedge? Let us know in the comments below. For more insightful videos about crypto and the stock market, be sure to subscribe to our channel and hit the like button if you feel the video is useful. Until next time, take care.